Hey there, everyone. Dave Keller here with Market Misbehavior. Welcome to my weekly show here on StockCharts TV. Today, we're going to talk about an article that Goldman Sachs recently posted where they did some research on quarter-end holdings from the end of Q3 and highlighted stocks that, according to their hedge fund universe that they were filtering through and their mutual fund universe, stocks that were shared on both lists, or what they called the shared favorites list. So this was highlighting stocks that showed strong ownership in the hedge fund community and the mutual fund space. What I wanted to do with this episode, not just to share with you the 6 names that were highlighted in the article, but to really show you a process that I do all the time with StockCharts.com, because I read a lot of stuff and I read a lot of commentary from different places about, a list of names. Here's a list of 5 stocks that have certain characteristics. I always want to look at the charts. I always want to think about whether the charts are telling me it's a good time to take action on one of those charts. And so I'll show you the process that I use of getting the charts into a chart list, evaluating performance. Then we'll go through some of the individual charts, talk about how we can use scans and alerts to really supercharge our ability to identify actionable movements with that list of sort of pre-identified stocks. Before we get to the list and some of the tools that I use on StockCharts.com, as a reminder, I do a daily market recap show every trading day after the close. I hope you'll check it out. That's on my YouTube channel called Market Misbehavior. I also have a Market Misbehavior podcast. I've interviewed a lot of fantastic fellow StockCharts contributors like Tom Boley and Mary Ellen McGonigal, famous journalists like Bob Pisani, former hedge fund managers like George Noble and many others. Most recently sat down with Steve Sosnick, who's the chief strategist at Interactive Brokers. Again, you can find that podcast on my YouTube channel, also on all the podcast platforms. All right, let us get to the charts here. And what I'll show you is, first off, let's say you read an article and it has a list of names. And this has happened to me for years. I would read Barron's or IBD or some website somewhere, and there'd be a list of stocks, an article about a particular theme, and I would immediately want to dig into the charts, start to filter through and identify the strong technical setups, because a lot of times articles like that don't really focus on the technicals. They're focusing on fundamental themes and stories. They're focusing on a lot of other things. So I want to get it into the language that I speak primarily, which is technical analysis. Take advantage of the fact that they've sort of pre-identified some names that could do well, but then focus on the chart. So what we do here is on our dashboard, you want to go down to your chart list. First thing we want to do is just get these names into a list. Now in the upper right, you'll see the little gray button that says New. You want to give it a name and have it be something that makes sense. Then you just want to enter them, with commas like this. This is not the list of stocks, but just so you get an idea of what to do. That's it. Create new list. Now, in terms of how we sort them, in terms of the data we bring, all of that comes later. We just want to get a chart list with the charts in there. So once you create new list, it's going to look kind of like this. This is actually the 6 names that came out of it. And I have them sorted by sector, so you can click on any of these column headings, and this is the summary tab once we have our list in here, and I'm sorting them by sector. So we have the S&P 500 just for comparative purposes, but you'll see the 6 names that were highlighted. One in the communication services sector, Spotify, obviously the streaming music platform. 2 financial stocks, which are really more fintech names, payment processors, Visa and Mastercard. In the industrial sectors, 2 names, CRH, which is in the building materials group, and Vertiv Holdings, VRT, which is an industrial supplier, and then Talen Energy, ticker TLN, that's actually in the utilities sector on the StockCharts platform. Now, once you get them in this list, remember we can sort them by different things. We can look at market cap to see how big these names are from large to small. Why not take advantage of the StockCharts technical ranking, the scooter ranking, which will show you sort of the technical score, the trend score of these different names relative to their peers. So we can see immediately 2 of these stocks scoring pretty highly, right? Vertiv Holdings and CRH, the 2 industrial names, 85th, 90th percentile, which is pretty good. Big gap lower to Talen Energy, which is 58th. And you can see Visa, MasterCard, and Spotify all in the bottom quintile, the bottom 20% of large cap names based on that comparison. Now, once I get the names in here and just get a sense of what they are, I often go right to the performance report. This is a really good way, if you have a huge list or even just a small working list, to just understand performance, right? Because technical analysis is all about analyzing past performance and using that to make an educated guess about what might come next. So we have to understand the performance first, right? We have to analyze the trends up until today and see what's been working and what's been not. Now, you can sort these on different categories. We're just looking at year-to-date performance, so we can focus on different time frames. We'll start here. So Talen Energy, TLN, up 73% for the year. VRT is up 57%. CRH up 35%. Spotify up 32%. The S&P is here at 17.5%. So what strikes me immediately is one consistent pattern with most of these names, except for Visa and Mastercard, which are scoring pretty low by any metric I'm bringing up here. The rest of these names have all performed pretty well and all have outperformed the S&P 500 from 14% in the case of Spotify to 55% outperformance for TLN. But let's look at the last 3 months, because this report was based on the quarter end holdings from the end of Q3. So that's basically the snapshot of the fund at the end of September. Now we've had about 10 weeks since. If I go back 3 weeks, that takes us back to like mid-September. So that's a pretty good way of sort of analyzing how have these stocks done kind of as they were being added to the report to today. Now we can see the pictures a little bit differently, right? Since these names were noted, or since they were reported in the quarter end holdings, VRT is up 42% over the last 3 months. So from mid-September now to mid-December. CRH is up about 12%. Those are the only two that have actually outperformed the S&P. And I think that's a great way of thinking about a list like this. All of these stocks, as you'll see from the charts, we're doing pretty well going into the end of the third quarter. I think the paths have diverged quite a bit since they were added. And I would say only two of these have pretty constructive charts today. And these are pretty much the ones that are at the top of the list here. VRT and CRH are both outperforming the S&P in the last quarter. Both are, in a position of relative strength compared to their peers. Everything else is underperformed, with Spotify the worst performer over the last quarter, down about 18%. So do you see how just putting the charts in a list, even not even getting to a chart yet, but just using the tabular data just to sort of see what you have to work with. And especially if you have a larger list, these initial steps can help you focus on like the actionable ones, right? Which are the ones that are outperforming over a certain time period. Or if the last month has been a dramatically different shift in terms of the dynamics of these of the markets, look at that time period and see which stocks are doing well and which ones might be struggling. All right, so now we've looked at the performance tab. From here, I tend to kind of just go to the list. So I'm going to do the chart list view. So we're going to start with VRT, and we're going to kind of go through this list of charts. So what I'm going to do here is just show you what each of the charts look like. I'm going to highlight, where they were added or where, this report was based on holdings at the end of September. So let's focus on what's happened from the end of September to where we're at, right, over that next 9 or 10 weeks, because that gives us a sense of where they're at today. And then think about some key levels that we might want to pay attention to, or key patterns we might be on the lookout for. We'll start with the two strongest charts, VRT and CRH. These are the two that are, it's certainly stronger relative to the others from a technical perspective. VRT, I would argue, is one of the more constructive charts. And the reason is because, a couple reasons. Number one, we're above all the moving averages, right? So we're above the 21-day and 50-day, although we're actually testing them today as we record this on Tuesday, December 9th. The 50 and 200-day moving averages are both sloping higher. Obviously, the stock's been outperforming off of the April low. But if you take a big step back from your monitor, you can see this sort of large pattern of higher highs and higher lows. Most recently, we put in a higher low with this kind of hammer candle looking pattern with a close around 160. That was a couple weeks ago. From there, we've sort of pushed higher. So I'm inclined to sort of give the benefit of the doubt here, as long as we can continue to hold the 50-day moving average. And if we would start to break that, maybe I look at the previous swing low around 150, which is the bottom end of that hammer candle, as a potential area of support. there's anything that concerns me about this most recent leg higher, note how this push higher, if you look down at the RSI, see how it's stalling out around 60? So the RSI is kind of settled into a neutral range between 40 and 60. In a bullish phase, the RSI often gets well above 60, above 70 often, and on pullbacks, the RSI stays above 40. In downtrend phases, the RSI spends most of the time in the lower half, often gets oversold on drops, and on rallies, the RSI doesn't get much above 50 or 60. Here we're in a neutral range where the RSI is kind of range bound between 40 and 60. So I think waiting for a break in momentum above 60, below 40 would be a good indication of what might come next for that particular stock. But for now, maybe putting in a lower high. We're going to keep an eye on the moving averages. CRH, I would argue, is probably the strongest chart out of all of these because it's in a primary uptrend, most recently gapped higher. And that happened here. We have the gap above 122 or so. You can see we hit 122 here on this gap in October, and then we had a bunch of kind of retests of that resistance, but we never really followed through. So instead of gapping higher and running, we actually gapped and then fell down a bit, which is a sign of internal weakness. What's happened now is we had another gap higher and we've rolled over a little bit here. So I think, making sure we hold that breakout level on a pullback, which is around 120 to 121, 122, I think would be pretty helpful. But overall, not a bad structure, right? Prices above the upward sloping moving averages. They're now back to the proper order with the 21-day EMA above the 50-day, the 50-day above the 200-day. Primary uptrend. Now, I would say if there is a rotation lower besides the moving averages, I'd also be looking back to these swing lows around 108 or so. That was the lows from September a couple times. And then in November, we basically retested those lows before rotating higher. So if we would see some weakness, we fail to hold those breakout points, I'd probably be looking for potential support down in that general area. So those two charts, pretty good. I would say not much to not like there. And again, the relative strength on both of those charts, pretty decent. Now here's the bad news. The other four charts, I would say, don't look particularly strong right now. But the reason why I think they're helpful is because we want to lay out a framework as to when they might start to look constructive again. So my goal here with the other four charts is to really clarify or quantify why they don't look like attractive charts from a technical perspective, and then think about what might change, right? What would we need to see to turn more constructive on some of these more negative names? Visa and Mastercard have fairly similar structures here, so we'll look at each of them, but there's a lot of similarities here. What strikes me about the chart of Visa, right? The last really good thing that happened on the chart of V was this break to new highs in June. But if you look, one of the things that was very noteworthy about that rally, we made a higher high in May and a higher high in June, but look at how there was a clear bearish momentum divergence, right? And that's a common topping configuration we're always looking out for. When you have new highs on weaker momentum, that implies that rally should inject skepticism, not optimism. Then we have the gap lower that just continued to drift downwards. From that point on, we broke down through the 50-day, we tested the 200-day, but all along the way, look how every one of these sort of rallies either makes a lower high or stalls out at the previous peak, right? So we rallied up to around 358. The next rally stalls out just right around that level. We tested the 200-day. We bounced to around 350, 355. We bounce again to the same exact level. So we've had a number of times where Visa could be trying to make some gains and break out, but it stalls at that breakout level every time. I always like to tell people, right, in a bullish phase, breakout should be confirmed, right? We should be breaking to new highs. We should see optimism, which fuels demand, which puts prices to new highs. If we fail to get above the previous swing high, that's an absence of upside momentum. That's an absence of buying power. And I think that's what's marked the chart of Visa. So we really haven't had a new swing high since June. And now most recently, we've now broken through the 200-day. We've broken through support around 333 to 335. Most recently in November, we broke to a new 3-month low, rallied, and then look at how we retested that breakdown level. And in the technical toolkit, one of the common things you look for is a break of support and then a rally that tests that support level from below. And then if we curve down again, that's usually a really negative sign because that just confirms the fact that we're in a primary downtrend. now that we can see when the moving averages are in the bearish configuration, price below the 21-day EMA, which is below the 50-day moving average, which is below the 200-day moving average, they're all sloping lower. The momentum now in the bearish phase, we're mainly below 50. RSI is becoming oversold on downturns. Relative strength is negative. You can see on the chart of Mastercard, similar sort of setup, some different nuances, but same thing, right? Every rally has failed to eclipse the previous rally, so we're making lower highs, we're making lower lows. Most recently, we broke down, failed to hold the 200-day, failed to hold it again, and now we're breaking down moving averages in the bearish configuration. Negative momentum with the RSI mostly below 50. The relative strength is underwhelming. So what would it take for Visa and Mastercard to look more constructive? So all of those items on that checklist I just listed off would have to change, right? We'd have to have a rally where the price breaks back above the 50-day moving average. That would tell us we're in a different phase than what we've seen here in the last couple months. Ideally, we make a higher low, moving averages start to slope higher. Ideally, momentum improves. The RSI pushes above 50, pushes above 60 on a rally, which suggests we're in more of an accumulation phase. Relative strength in that condition most likely turns higher. So for Visa and Mastercard, I would say since they were added to that list, which was kind of back here when they were reported as part of these quarter end holdings, from there, I would say the potential topping phase that we would have noted at the end of the Q3 really continued into a confirmed downtrend phase. And at this point, these are the types of charts I generally avoid, but I love to list out things that would tell me that this is now an improving chart. I don't see it yet on the chart of Visa or Mastercard, but those are some of the things I might be looking for. All right, two more charts to highlight then that round out this six names that were the Goldman kind of shared favorites list. TLN looks not as bad as Visa and MasterCard in that it's still above its 200-day moving average, but I would say at best in a consolidation phase and at worst potentially starting to break down here. We're still above the 200-day, but we're below the 21-day EMA and the 50-day simple moving average. Look at that break of the 50-day and then these failed attempts to get back above there. And it reminds me a lot of kind of this period back here in February, March, April. Those breaks of the 50-day can be a great sort of just initial sign that something's different. What we have is a change of character. Then in March and April, we remain largely below the 50-day. And what I often look for is, all right, can we finally recover it to the upside? Can the momentum improve where the RSI pushes above 60? So that right there, what you see coming off the March and April lows, that would be what I would be looking for here, because a lot of really good gains can come, but only after that pattern of accumulation is confirmed. And that's what I don't think we see now with weaker price action, weaker momentum, and weaker relative strength. So an improvement similar, I think this is a great playbook to kind of keep in mind as an opportunity to play a reversal. And what happened here is the price broke above the 50-day, momentum improved, the RSI gets above 60. In that situation, relative strength starts to improve. Those are the things I would look for on TLN, which is again in the utilities sector. All right, finally we have Spotify. Probably the least attractive out of all of these charts because it's just in a clear downtrend phase, right? Spotify made a new high at the end of June, and by the end of September, really wasn't breaking down, but it wasn't going up anymore. You can see that the RSI was really in a neutral range here, mostly between 40 and 60. Price action is sideways. Moving averages are flat, so all the technical configuration tells us we're going in the third direction, right? Charts at any point can go in one of three directions. An uptrend of higher highs and higher lows, a downtrend of lower lows and lower highs, or a sideways consolidation phase where the highs and lows are fairly even. And that's what we saw here. Then, right as Q4 begins, we see a change from a sideways trend to a confirmed downtrend. The moving averages start to slope downwards. We broke below the 200-day, tested it from below, and broke down similar to some of the other charts. Not a great look. Now we're below the moving averages, which are in a bearish configuration. The RSI clearly negative, with the RSI becoming oversold on downturns and not getting much above 50 since the end of September, and the relative performance is down. So Spotify, by my read, just a clear downtrend phase. And while you may want to be more aggressive if your approach is to buy beaten down names and hope that they recover, that's fine. That's an approach. It's not one that I often use in my own accounts. For me, I would much rather wait patiently for signs of accumulation. So for the chart of Spotify, similar to some of the previous ones, I look for those conditions to change. Look for a break above the 21-day EMA, ideally break back above the 200-day moving average, which would confirm a clear new accumulation phase. In that case, we want to see the RSI push higher, above 50, above 60 to indicate new influx of optimism, relative strength improving. So those are the 6 charts. Again, only 2 of them fairly constructive right about now, but I would say the other 4 in clear downtrends, but I would say pretty easy to think about what you might want to see on the chart. So now it's just a question of waiting for some of those constructive or charts that are negative to turn more constructive. So how can we use the StockCharts platform to follow these names? 2 things that come to mind. Number 1, alerts. Number 2, scans. Let me show you how we can use both of those separately. So with alerts, it's pretty easy, right? If I'm looking at the chart of Spotify, just make sure you bring up the chart and on the Sharp charts, which is what we're looking at here, or with the ACP platform, the advanced charting platform, both of them have an alert function built right into it. They're in different places, but on Sharp charts, just bottom right corner of the chart, you'll see the little bell icon. And this is helpful if you have a particular price level. It's just a quick price alert. I want to know, for Spotify, rallying up to the 200-day would be pretty helpful. So 650 is right where the 200-day moving average is. You can kind of see that on the y-axis over there. So I could say Spotify breaks above 650. I could say break above 200-day moving average. At the bottom, I usually select all of these, and email is going to send an email to you. In Gmail, I have a rule set up, so anything from the StockCharts alert goes into a folder, so I can review those anytime. Text message, it pops up on my phone, which I found super helpful. And then the site notification will put a little banner on the top of your login. Checking all those, just make sure I don't miss anything. And I often currently have about 79 active alerts, just looking for different random charts like Spotify, some more significant ones like the VIX, broad market stuff, but I use alerts a lot because I find they're super helpful. You hit save alert, then you're done, right? Then the StockCharts platform is now doing the heavy work. It's going to follow the chart and let you know when it breaks above there. But let's say I want to look at these 6 stocks, or let's say I had 60 stocks on a watch list, and I want to say, well, you know what? I actually want to scan for when any of those would break above their 200, would cross their 200-day moving average. So how do we do that? Then we want to go to the scan workbench, right? The scanning tool. This is one of the more powerful parts of the StockCharts platform. There's a bit of a learning curve, and I found with any really cool feature of a platform like this, there's a bit of a learning curve, but super worth it once you finally set it up. If you don't know how to get here, you can click up on your login and go to your scans, or in the upper left, you'll see scans and alerts, and that'll get you to the advanced scanning workbench. The scan will pop up with kind of a default placeholder, which is just saying I'm looking at stocks where the 20-day moving average of volume is over 40,000 shares. So it's just having a minimum volume threshold just to kind of get rid of the junk that's pretty illiquid that you probably don't want to look at either. Now, here's one very important argument that you want on your scan. And if you're kind of familiar with coding, you can hand type these things, but if not, just copy and paste this particular argument into your scan. What you basically want to say is the closing price crosses the simple moving average 200 days using the closing prices, right? So I'm just saying today's close has crossed the simple moving average 200-day using closes. This is going to say, tell me if any stocks that are in my universe, anytime they cross the 200-day moving average, I want to pop up on this scan. Does that make sense? Now what we want to do is we can add our chart list. So remember, we saved a chart list. So I created a chart list called Goldman something, something, something. So if I go down here, and I've got a ton of these, but I go down to Goldman shared favorites list and add, and that's just going to add the argument that says, and the chart list is this particular one. So when I run the scan, it's basically just going to say, all right, tell me out of all of these names, which ones are showing a moving average crossover. Now that's just a moving average, 200-day moving average crossover. You can do that with any of the different predefined scans, different signals. There's a bunch of things you can scan for, and maybe there's a different way that you want to monitor some of these beaten down charts. Look for MACD buy signals, or the RSI to improve, or the stock breaking out on heavier volume. All those things are possible in the scanning engine. Once you have the scan set up, you want to run it, make sure you save it. That'll save it to your login. And then here's where things get really cool, right? let's say I create this scan for the stocks crossing the 200-day, we can then schedule the scan. So once you have it saved, I didn't actually save that one, but I have another one that looks for the moving averages to be in a proper configuration. And I can say, yep, every day at the market close, I want you to, replace, let's say, save in a new chart list, and I'm going to run this every trading day, save scheduled scan. What that's going to do is actually create and run that scan every trading day after the close, wherever you do, whatever you set it up for, and it's going to email you the results of the scan. So again, you just have you set up the chart list, you put in the technical criteria. Every day, if anything comes up on that scan, you're get an email with any of those names. So between the alert functionality, the fact that you can scan on some pretty sophisticated technical indicators and signals, and then automate it, right, with having the alerts ping you wherever you're at, and then also with the scheduled scan, really cool opportunity to set up the list of charts, and then have StockCharts do the heavy lifting and let you know when any of them might have fit your kind of general buy criteria. So there we go. That was a list of names. I read an article last week from Goldman Sachs highlighting some names that were on sort of what they called their shared list. Mutual funds and hedge funds, both in their latest reportings. Not a lot of technology in there, as you notice. There's some industrials and some other sectors represented. But I hope this helps you get some ideas about some of those names, but also to show how we can use the StockCharts platform. When you read an article like that, get the charts into StockCharts, set up a chart list, assess the performance, review the charts, and then use the alerts and scans to follow and maybe identify when they might be at buyable opportunities in the days and weeks to come. If you have any questions on the stuff that I showed here, use the comments section here on the YouTube channel. We'll certainly look for any of those questions and point you to further resources on StockCharts.com if we can. By the way, as a reminder, my market recap show called Chart This with Dave Keller runs every weekday after the close. That's on my YouTube channel called Market Misbehavior. If you head over there, you also find our Market Misbehavior podcast with some great fellow StockCharts contributors like Julius DeKempener, financial market wisdom from all sorts of different market practitioners. A lot of great charts and ideas discussed. So you can find that on my YouTube channel as well. For now, I will say have a fantastic week. Thanks for watching my show here on StockCharts TV. My name is Dave Keller with Market Misbehavior, reminding you it's always a good time to own good charts.